Yo, yo, yo. CPA strength back again. Strongest CPA in the game. Anyway, we're gonna talk about K1s right now. We're just gonna talk about what it is, where it comes from. Now it comes from a pass-through entity. Big pass-through entities are S corps and partnerships. We're gonna focus on K1 from an S corp today, an 1120S. Okay. Now it's called 1120S and S corp. I should have put S corp. S corp is a pass-through entity, meaning the entity itself doesn't pay taxes on the income or loss. It passes through to the shareholders, and it passes through via a K1. So I'm going to show you in 1 second, but you're going to have your 1120S tax return, and then then the shareholders are going to get K1s from the income or loss from the pass-through entity from the 1120S, and those K1s are going to go through to the shareholders' personal tax returns. So let's go. We have an 1120S. It files its own tax. It's going to file its own tax return. So we have the 1120S. The S corp makes a profit of $10,000. Now it has two shareholders, Tom at 50% and Mary at 50%. This S corp is going to file a tax return. It's going to send it to the IRS. The IRS is going to get it, and it's going to say, "Oh, okay. There's two K1s here. Tom and Mary, both 50%." So the IRS is going to know already with the filing of the 1120S. You know, they're going to be waiting for those K1s to come in by the Social Security number on the K1s. So anyways, the S corp's going to file. It's going to have a profit of $10,000. There's two shareholders, so they're 50-50 owners, 50% each on a K1. Basically, you know, there's a lot of sheets, maybe 10 to 20 pages, depending on what's going on in the S corp. And a couple of the sheets are going to be K1s. You're going to have two K1s. You're going to have Tom with his K1. It's going to say $5,000 profit. It's going to have some other stuff too. Maybe if they took shareholder distributions or a bunch of other stuff. But I mean, I want to focus in on the profit. So you had $10,000 profit with two shareholders, so there's going to be $5,000 profit on Tom's K1, and then $5,000 profit on Mary's K1. Then it's going to pass, the K1s are going to go from, you know, really the 1120S, the S corp, and the reason it's a pass-through entity because the profit or loss passes through to the personal tax returns, to the 1040. Now you got Tom's 1040. First page of the 1040, first half of it is all the different types of income. Line 17 is income from S corp. So you would have a $5,000 profit, and then that would be incorporated in his tax return with all his personal, other various worldwide income sources. Then your deductions, your credits, how much federal withholdings you gave that year. Also, similarly, Mary's K1 would flow over to Mary's personal tax return with her income, same as Tom's, you know, all her income, all her different incomes, and then $5,000 would be added in line 17 on the S corp income. K1 gets generated from the pass-through entity when it files its tax return based on the shareholders, and it passes through the income or loss, passes through to the individual person, to the shareholders on their individual tax return via a K1. Yeah, I hope this helped. I had a hard time picturing the K1s really until I started doing a bunch of tax returns, then I got it. But just think it's a piece of paper from the S corp. You're gonna get piece of paper K1s for all the shareholders in profit or loss, and then the K1's gonna go from, it's just going to slide over. It's going to originate from the S corp, from the pass-through entity, and then it's going to slide over to the personal tax returns. Hope this helped out. Anyways, please like, comment, share, subscribe. Tell me what video you want to see, because I got this video on a comment from somebody, from a viewer. So thank you very much for watching. Have a great day, night, wee hours of the morning, whatever. CPA strength, and I'm out. Deuces.